Welcome to Good Money Guide. Today we're joined by Alex Ridges. He's the global head of dealing at City Index. Now, there's lots of exciting things going on in the world of trading because of the US election. City Index have just released some new indices to trade around the election. So we're going to have a chat with Alex, find out a little bit more about what these indices are, how you can trade them, and see if he's got any tips and tricks for trading around the US election. So, Alex, thanks for joining us.
Hello, Richard.
So we've got a couple of new indices from City Index that are based around trading the companies and products that are affected by who is going to win the US election. Do you want to briefly take us through what they are and how you can trade them, and then we'll delve into them a bit more?
Yes, and so I think around these election times, again, I think every company, very similar to us, they're all a much of a muchness. Obviously we pride ourselves on quality, but these elections are really times where we can differentiate ourselves, and I think just provide some real sort of interest for clients to do something different and exciting and new. And I hope these markets sort of get some way towards that.
So there's quite a few interesting products at the moment. We've had one broker come out with a sort of binary bet option on the election outcome. We've had lots of brokers producing US election hubs. So how does this City Index election index differ from what everybody else is offering?
Well, I think what we've decided to do is almost have a more, we have short-term products and long-term products. This particularly is for the long term. So we're almost, well, if the Democrats or the Republicans win, you can put your position on before the election, but you've also got that position to run for weeks, months, years into, sort of into the new term, as it were.
Do you think you're going to see a lot of action in these indices after the election, or do you think people are mainly positioning, I suppose, their positions ahead of the election? Because it's quite.
Yes, I think generally clients will get in for the election, but I think, and actually this is probably quite refreshing for our clients, that a lot of retail clients typically tend to counter trend. So if the market drops, they buy; if the market rallies, they sell. But I think with these, we'll see a lot more clients that will get into a position, realize it's doing well, it's winning, and probably hold those, almost as a long-term play. That I think the effects on these stocks won't just play out before the election, although there will be some, because there'll be sort of, I think people are very aware, or hopefully I can explain to you later exactly what we think will be moving. But I think the impacts will be sort of weeks, months, years, as well as policies of the new governments gradually come into play.
Okay. So take us through exactly what these indices do.
Yes. So we've got a basket of stocks for the Democrats and a basket for the Republicans. So these are stocks and sectors that we expect to have the biggest boost from one or the other. And actually, in some forms, it's not just a boost of a particular party winning; it's also the lack of the negative. If you see what I mean, it's the double negative of, say, the Republicans not winning, which is going to boost those stocks. If you see what I mean. So I think so. We've said we've got 200 stocks in each basket. To take you through some of the thinking around them, if we say, first of all, look at the Republicans, because I think the Republicans, the case for those is almost the easiest to comprehend. So we're looking at banking and fossil fuels as the two big sectors. So banking typically. Exactly. Yeah. Well, yeah, I know exactly the sort of the perceived as evil. Anything evil seems to be boosted by the Republicans. So we're looking at banking. Basically, I think from a deregulation perspective, that Trump is always going to be on the side of the free market, and I don't think it's that much more complicated than that. I think a bit of liberation for the financial sector, and that's all banks and financial services firms tend to need to fly. Then fossil fuels, again, it's more of a not Democrat, so they're not going to face extra regulation, extra taxes, and to some extent, again, I think this is partly. If we say switch to the Democrats, this is where anything to do with renewable energy is really going to seen as being as to fly under the Democrats, because that's exactly in their manifesto. Just to pull in a couple of other bits that we see around the Republicans. First of all, defense spending, that's going to increase. So again, when we're looking at defense manufacturers, that's obviously was a winner. And generally anything in the manufacturing sector, Trump, I think but generally by the wider market, is seen as pro-business. So from that perspective, there's quite a wide range that could include, manufacturing is a pretty wide remit, but I think sort of regular businesses, which is basically not tech, if you see what I mean.
Okay. And how volatile do you expect these indices to be ahead of the election and then afterwards?
Well, I think the interesting thing we've seen certainly in the last week, is almost a strengthening of the I suppose it's not support for Trump, but again, a strengthening of the confidence behind Trump. And what we've seen for the indices is almost, I think it's rather than extreme volatility, it's almost a gradual move as the polls move one way or the other. We're seeing sort of sustained moves in them. So actually, from trading these things, I mean, obviously I'm not allowed to give advice, but from the perspective of the trading strategy, I think quite tight stops are probably quite good in these. I think we're seeing sort of long-term drifts. To want of a better quote, the trend is your friend in these.
Okay. And how are people generally trading them? Do you see just flat outright positions going long, or are people shorting one indice, or are they putting an arbitrage on? Are they trading a bit of divergence between the two?
I think generally we've got clients with a strong view one way or the other. So the majority of clients are just, again, going long one party. We haven't seen that much interest in shorting because, of course, shorting always brings with it certain complications of borrowing, etc. So we're generally seeing sort of quite aggressive views to one side. And as I said, we've seen quite a few clients with relatively tight stops, thinking it's either going for me or I just want to get out and I'm done, which I think is a good trading strategy.
So can you short these indices if you wanted to put an arbitrage on or bet against it?
Yes, you can.
Okay. And do you see a pattern with what type of traders are using these indices? Is it people that traditionally trade stocks, or are index traders or short-term foreign exchange traders getting involved in the action as well?
I think for us, it's been quite a surprise that I think the UK election, which doesn't quite clamour the interest that the US election does, I think probably because of the characters involved. Traditionally, the UK election, we saw predominantly equity traders getting involved. It's their bread and butter. But actually, as the US election comes along, it's good, and I think it's good for us, and actually good in sort of expanding our clients' product knowledge. That we've really seen a lot of clients that would traditionally be trading FX. And obviously indices transfer over better to equities, but FX as well. I mean, I think the play is quite similar, that in the last few days we've seen the dollar rallying strongly, and you can see obviously the dollar is impacted by many things, but there is a reasonably strong correlation between Trump's sort of almost favor in the betting markets and the dollar. And I think if we see Trump continue to shorten, to be more likely to become president, the more we'll see strength in the dollar. And so that correlation has almost got FX traders across to go, okay, well, I've done this, I've made money on this, what's next?
Yeah. Great arbitrage there as well. You could just work so many legs into this.
Yes, it is. Yes, exactly. And actually, we've put together two other markets that are a lot sort of smaller in scope than these. We've been allowed to offer simple markets on how many states will each party gain, and how many votes in the electoral college. I want to say seats, but votes in the electoral college. So we can actually allow in limited size our clients to trade those, which again is just another angle that if and as we were talking earlier about what's going to favor Republicans, and particularly for when we look at the Democrats, we're looking at tech stocks in particular that are going to do well. Because I think the Democrats, they're always seen as pro-tech. They're California. The California vote. I think it's about 90% certain to be Democrats, to be Democratic. So in a way, if our clients are holding equity portfolios of Nvidia and the like, but are worried about a Trump election victory, they've got an alternative view that allows them to again make money off the election to hedge their stock positions they may or not want to give up.
Okay. We'll get onto hedging in a minute, actually. We'll finish up with hedging. But just beforehand, I was playing about with the platform just before we spoke. If people want to trade these indices, where do they find them on the platform?
They are in the thematic indices section. We have a sort of popular market section where anything topical we add, and it's easily accessible. But these will be in the thematic indices. Again, we have quite a few different ones in there. We have sort of AI indices, etc. Again, all guiding. If people want a sort of a simplistic way to access, to have a view on the success or not, of AI, or again, Democrats or Republicans, that's the place to go.
Okay, and you've got a US elections tab as well, haven't you? That has, I presume, those voting indices that you were talking
Yes.
about. How do those work if people want to take a position on number of votes?
So this is just for spread betting rather than CFDs as well. Because obviously we're limited by regulation, and so when clients have a view, again, to cover risk, they trade in terms of a pound per seat or a pound per state. So again, and I think with all elections, the more of a landslide the election is, again, the more it's likely to favour each of these. So again, that's why our markets sort of cover that the more of a landslide, the more clients are going to be winning or losing.
Okay, and let's just talk about hedging one portfolio around the election. Obviously, you can't give advice, so you can't sort of tell us what to do. But what's a good strategy that you could use City Index tools to hedge your portfolio over the volatile period ahead of the US elections?
Well, again, I think it goes back to exactly what your trading strategy is, what stocks you're trading. I mean, I think so. At the moment, a lot of our clients are trading tech. Tech has been the big thing of the last 2 years. I mean, it's always the big thing, but particularly the last 2 years. So that's where I think, from this perspective, clients wanting to hedge an outcome, particularly hedge a Republican outcome, this is where they can be buying the Republican index just to give them some cover. And actually, if they want to stay market neutral, this is where they would be shorting the Democratic index to not have an overexposure to indices in general, but just to make sure that the period of the election and any volatility, they've got some negative weighting in there towards that.
Anything else you think we should touch on?
What makes up the Democratic index? So we've got tech. Obviously, we've gone through tech as making up the majority of the index, but as I said, we've got 200 stocks. So there's also renewable energy, which is obviously an obvious one. The Democrats have got a lot more of a green agenda. And then we've also got healthcare. So the Democrats are seen as increasing healthcare. And again, I mean, increasing government spending on healthcare. Obviously, a lot of it's private. But I think the view is that Obamacare, et cetera, will be expanded. So any one of the big healthcare manufacturers is really going to be flying because of this. So again, when we're talking about hedging and how to look after your portfolio, again, anyone that's long or short those, it's an interesting consideration. And then again, these have become an easy way of just getting rid of some of that risk if people want to.
Okay, and what's in it? So is that 200 stocks per index, or is it
Yes
ETFs, a few bonds, or
no? Yeah, so it's pure. So it's 200 stocks, and they're all weighted based on their market cap. So again, what we didn't want to happen was we've got some tiny stock that actually turns out Trump has loads of shares and all of a sudden that flies and that sort of biases the index. So we wanted to still make it relevant to the overall market and more relevant to, again, as we were talking about earlier, to hedging a portfolio rather than being an out and out, Trump is going to favor X or Y, or Democrats are directly going to be influencing these companies.
Okay. And how long have these indices been running?
Well, we've had different thematic indices for, I think, about 3 or 4 years now. But in terms of the Democratic and Republican indices, we're talking about the last 3 or 4 months.
Oh, that's a shame. It would have been really interesting if they'd gone back, 8 to 12 years, and we could have seen what happened to them around previous elections. But I mean,
yes,
now that they're built, they'll be there forever. So we'll be able to look at what's happened at this election, and then in another 4 years.
Yes, exactly. And it's funny when we talk about, we have a lot of internal talk. Of course, being a big broker about what are our risks going into these elections, and it's always funny that we have a lot of. And again, I think this is why these products are quite good, because for us it seems more like, again, it's more what are the markets going to do In terms of extreme volatility, of course, you can never rule it out, but we know what happens when Trump gets elected, and we know what happens when a Democrat gets elected. So we're not expecting ridiculous volatility. Obviously, we'll see raised volatility, and as a broker, I should be screaming, volatility is going to be ridiculous. But we see it as sort of, again, just saying, more gradual moves and a more of a sensible sort of shift rather than anything extreme.
Okay, thank you very much for telling us about the election indices.
Oh, pleasure.
I look forward to having a little play about with them. I think I'll probably have a little punt on one of them later. If anybody out there has used City Index or the City Index indices, please do come to the Good Money Guide, leave a review, tell us what you think. Alex, again, thanks for joining us.
Brilliant. Thank you very much.